Today was an amazing day for Nvidia. Unfortunately, the same can't be said for Coreweave, which just reported earnings and the stock is down roughly 6%. Let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so first, let's start off with a quick price action. We can see Nvidia was up nearly 6% on the day if you count the overall day movement and the after-hour movement. Now, one of the biggest bullish sentiment impacting the overall market is just the government reopening, right? That's creating this extremely bullish sentiment for the overall market trend. Now, in the past few days, the stock market has been down. And there's been a lot of discussions of why this could be down. And one of the reasons was Michael Berry, the guy from The Big Short. And he has recently shown that he has taken short positions in companies like Nvidia and Palantir, pretty much shorting the AI market, which has created this negative sentiment towards this space. Now, today, Michael Berry actually explained a little bit more about his bearish thesis. And the main reason is that the understating depreciation by extending. So pretty much he's saying that big hyperscalers are understating depreciation by extending their useful life of assets, artificially boosting earnings. So normally what would happen is he thinks that GPUs their useful life should be only 2 to 3 years instead of some of these 6-year lifetimes that a lot of these companies have. And I actually believe that this is completely wrong. And the main reason is obviously Meta Platforms is increasing its useful life of GPUs because those GPUs are becoming even more and more useful for its core revenue business. The older GPUs are still used for any form of AI inferencing, of AI model that is used for its recommender system, which is pretty much its advertisement and his engagement platform. So I think Michael Berry here is extremely wrong with the useful life of NVIDIA chips. And we're going to actually talk a little bit about it from Coreweave's earnings. Now, he is going to talk a little bit more about it in more detail coming on November 25th. So stay tuned. It's something we're definitely going to cover in this channel. But overall, I would say if the useful life is what you believe is your bearish thesis against companies like Nvidia, that's not something that I would blink an eye for, right? I don't think it's a big issue. But again, I'm going to wait till November 25th to see what he has to say. Now, on the bullish trend, TSMC did report their October numbers, and their October numbers are up almost 17% year over year and 11% month over month. Their overall year to date, so January to October of this year versus same time last year, is up roughly 33.8%. Now, this is, if I remember correctly, this is TSMC's largest number monthly basis. And it's overall because of the demand for AI solutions. This is what we continue to hear. Not only that, we recently saw a few days ago that Nvidia CEO wants TSMC to boost chip supplies amid strong AI demand for the Blackwell and Rubin. So overall, in this episode and in this channel, we can see that we are extremely bullish on Nvidia. And this is a company we cover almost on a weekly basis, easily on a weekly basis, sometimes almost on a daily basis. And if you want more information like this, make sure to check out my community at whatthechiphappened.com. The link is down below. We have over hundreds of members right now, and it's a great community for both the semiconductor and AI investor who wants to know research about this amazing market. Now, let's jump into here Coreweave, why the stock is down. And it also does have both some bullish case for Nvidia and maybe why the bears are excited about Coreweave right now. So the first thing, let's talk about the bearish case. There was a reduction in their guidance for fiscal year of 2025, and most likely a guidance reduction for quarter 4. The main reason is there was delays on PowerShell delivery. So remember, CoreWeave is building these massive data centers, but they rent out a lot of these PowerShells. So that PowerShell was pushed on that was supposed to come out in the fourth quarter is now being pushed and delayed to the first quarter of 2025. So that's the main reason the stock is down. Now, luckily, the company did mention that their customer who had rented this power already, they did not shift or leave the platform, right? Instead, they just adjusted their delivery schedule. They're saying, yep, okay, you're a quarter late. We'll still take the full original agreement and we're okay shifting it one quarter ahead behind, right? So I think that's bullish. It showcases that this customer is compute constrained. And even with a quarter delay, it's not affecting CoreWeave's long-term revenue. In my opinion, this is not something that CoreWeave could have helped. One thing that they are doing is they're working with multiple PowerShell companies. So eventually this is not going to be an issue. But as of right now, it is. Now, at the moment, I'm going to give them a pass on this. But obviously, as we continue to move on, and every quarter, if we hear the same type of excuse, then that is something to definitely take a closer look at. Now, they do also mention that the issue is not the power itself, right? They believe there's plenty of power in the United States. It's more the power shell, the ability to put all this power into one area and have it running already for these data centers to be built out. Now, because of this backdrop, 2025, the guidance was dropped down a little bit. CapEx was also dropped down to roughly 12 to 14 billion, where previously was in the 20 billions. Now what they did mention is the quarter four is now just the CapEx in quarter four is just going to be recognized in quarter one. And they expect CapEx in 2026 to be well in excess of double that of 2025. Huge capex means a lot of money for companies like Nvidia. So Nvidia, that's definitely bullish thing number one. Now, remember, I do now believe we're going to see some strong growth in guidance for quarter one, as long as everything here stays in line. Two other things that I want to mention here with CoreWeave is they mentioned that no single customer represents more than approximately 35% of their revenue backlog. This is down from 50% last quarter and down from 85% at the beginning of the year. Remember, one of the biggest bearish cases for CoreWeave was that they were only with one customer. Now they're saying less than 35% is one customer alone. The other thing, and this is one thing that I think NVIDIA investors are actually going to be excited about, and it's something to combat that Michael Berry bearish case. Demand for AI cloud technology remains robust across generations of GPU. For example, in quarter three, they saw their first 10,000 plus H100 contract approaching expiration. 2 quarters in advance, the customer proactively recontracted for the infrastructure at a price within 5% of the original agreement. This is a powerful indicator of customer satisfaction, as well as a long-term utility and differentiated value of the GPUs run in CoreWeave's platform. So if these GPUs are so old and their useful life is not that important, shouldn't their prices be declining? Shouldn't there be no demand for them? Well, here we're seeing that that's not the case. There's plenty of demand. They're accepting and extending their contract 2 quarters in advance, and the original price is not much cheaper than what they paid originally. So overall, I don't believe this is, I think this is actually extremely bullish for companies like NVIDIA. And again, CoreWeave, I think the sell-off is justifiable in the short term of things, but I think as a long-term investor, and I'm a huge investor of CoreWeave, I'm actually going to be buying this dip. And if it gets lower and lower, I would gladly buy more and more. Now, there are rumors that Core Scientific is that PowerShell company that is causing delays right now. It could be one of the reasons the stock is down roughly 4% on the day. The market might have heard about this preemptively and caused a sell-off beforehand, but this is what we're hearing right now on X and other platforms. So I hope you guys enjoyed the episode. Make sure to hit the thumbs up and the subscribe button, and see you all next time.